Namaste, viewers. It is Saturday morning, May 31, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Benchmark Indian equity indices closed lower in the final session of the week as Indian markets started the June series on a cautious note as global tariff tensions and GDP uncertainty offset gains from a strong FPI inflow. Indian benchmark indices kicked off the June derivative series on a subdued note on May 30 as optimism over strong foreign portfolio investor FPI inflows and domestic growth prospects was overshadowed by caution ahead of GDP data and mixed global cues, which came in later in the evening. Investor sentiments also weakened after U.S. Federal Appeals Court reinstated steep tariffs on foreign imports, reversing a lower court decision. Market sentiment remained cautious amid lingering volatility as investors parsed the final session of the corporate earnings for the March 25 quarter, awaited Q4 FY25 GDP figures, and tracked global trade developments tied to US President Donald Trump's latest tariff measures. At close, Sensex was down 182 points or 0.22% at 81,451. The NSE Nifty 52 settled lower by 83 points or 0.33% at 24,751. Eternal, SBI, HDFC Bank, L&T, and Dr. Reddy's Laboratory were the top gainers among the Nifty 50 constituent stocks, whereas conversely, Bajaj Auto, Hindalco, Shriram Finance, HTL Tech, and Tech Mahindra were the top laggards. Among the broader basket, Nifty Mid Cap 100 and Nifty Small Cap 100 indices ended with a loss of 0.06% and 0.03% respectively. Nifty PSU Bank Index outperformed others by settling higher, led by Maharashtra Bank and UCO Bank. Barring Nifty Media and Select Financial Services, all other sectoral indices on the NSE ended lower. Nifty IT and metal indices were the top laggards among the Nifty Auto, followed by Nifty Auto Index. The market capitalization of NSE listed companies stood at $5.17 trillion. Meanwhile, market volatility remained under control, with the India VIX falling another 2%, indicating continued risk moderation. The GDP growth touched a fourth quarter high of 7.4% in the last and final quarter of FY25, with full year growth ending at 6.5%, and as investment demand, helped by public spending, lifted the economy, according to the data released by the government on May 30. GDP growth was higher than the previous quarter number of 6.4%, but lower than 8.4% growth locked in the fourth quarter of FY24. Economists contend that the economy's growth momentum is likely to continue despite an uncertain global environment. India's economy is expected to grow 6.3% in FY26, with inflation settling lower at 3.7%. Great news for India. In the US overnight, US stocks spared earlier losses after Donald Trump had accused China of violating its deal with the US. The Dow Jones Industrial Average finished 0.1% higher. The Nasdaq was down 0.3%, and the S&P 500 fell less than 0.1%. The S&P 500 finished May with a gain of 6.2%. The Dow rose 3.9% during the month, and the Nasdaq picked up 9.6% as market bounced back from an April which trade fears dominated. Brent crude is $63.90 a barrel. Gold is rupees 95,930 per 10 grams, and silver is rupees 97,280 per kilogram. And the outlook for today, the weekly chart of the Nifty shows the formation of a small bearish candle that remained largely within last week's range, reflecting ongoing consolidation. The index is likely to continue trading sideways between 24,400 and 25,080 in the near term. The past two weekly highs are clustered between 25,050 and the 25,080, and a breakout above this band could trigger a fresh rally towards 25,300. However, failure to cross the upper end of this range may indicate a further extension of the ongoing consolidation. Key support in the near term lies between 24,400 and 24,500, which also coincides with the 61 0.8% retracement level of the recent uptrend from 23,935 to 25,160. It is advised to buy on dips approach as long as the Nifty holds above its 20-day exponential moving average DMA, which is currently near the 24,600 mark. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. In the meantime, happy investing, stay inspired, and remember, it is all about money.